Hi everybody, and welcome back to FANG Friday. This is Ross Healy, Chairman of Strategic Analysis Corporation and the Senior Portfolio Manager at McNichol & Associates Asset Management. This week, I've decided to take a moment and give you some perspective on the FANG stocks. I will show you the very long-term valuation of the FANG stocks, and we will see if we can glean some insights from what has gone on before. I've said it before, and I'll say it again now. The market has a memory, and what has happened in the past is frequently a strong clue as to what will happen in the future. As I will show you, repeating patterns of stock behavior are all too common throughout the market, and we can learn from other stocks as well. There's one additional advantage of being a client of ours. You know what to look for, as you have access to our SVA charts every day, so you can follow things closely when change is in the air. I'd like to state up front this week that when changes are coming fast and furious, as they are now, and as I expect will be the case for some time to come, joining our investment community will keep you up to date with all of your portfolio holdings and keep you well informed. Just go to www.strategicanalysis.ca/pricing and get started today. I should also observe that part of being fully up to date is also being fully up to date as far as the market is concerned. The stock market, meaning the NASDAQ 100 and the S&P 500, has some way to go on the downside. If history is a good guide, and allow me to say that it is, knowing where and when to step out and then back in again can mean a huge difference to your portfolio and your wealth. But before we take a close look at the FANGs and what is going on, as always, I do like to say thanks to everyone who likes this video and all our subscribers. Okay, let's start with a very long-term view of Amazon, and good reason for doing so, because I had been warning you at the HB1, that's 9.5 times book value, that the stock was breaking down and would head back down to its bubble price, which currently is $103. And I just wanted to show you here why the bubble price is so significant. Look, if we go back a long way, in fact, we go back to, we have to go back to September the 8th at the market low there. That was the last time that Amazon was as low as its bubble price, and it has never been lower than that. So that's a very significant level indeed. Alphabet, again, taking a longer look here, you can see that for a long period of time, certainly from 2008-9 on, the stock basically traded either side of its super growth price. That's 3.5 times book value. Now, in the pandemic, as more and more people went online, there was a lovely pickup. See what's happened here? In the fair market value, a lovely pickup in the fair market value. But as now the pandemic is hopefully behind us, what we're seeing is those earnings rolling, or the fair market value, and the rate of earnings growth rolling over. And I would not be surprised if they're going to take us back down to that super growth price again. The stock has just perfectly set back to that low super growth price. That's 4.5 times book value as of today, and we'll be interested to see if it breaks down, which, by the way, I have to tell you, I expect. Microsoft, I had been expecting Microsoft to stop at its HB1 price. That's 9.5 times book value. Remember, I had mentioned that it had sort of traded. When it got down to its HB2, it had kind of traded there for a little while before breaking down. I had never expected anything else but breaking down. And I thought that it might do the same thing again. However, that's not to be the case. the stock is actually breaking down as we speak below the HB1, and I suspect that the bubble price is coming up. Now, take a look at this long-term picture of Microsoft, and what do you see? Well, what I see is this long-term trend of the fair market value and the valuation of the company itself pulling away and pulling away and pulling away, and then closing down. It's what I call the jaws of death. And I suspect it's going to drag Microsoft down at least to its bubble price. This, by the way, a very, very common picture. Look at Adobe. Same picture, coming down, almost actually down to its bubble price. Visa, same thing, rolling over now and heading lower. There are a whole bunch of stocks, which I call the buyback companies like McDonald's, which look very much the same way and so far are holding up as they keep on buying their shares back. There's such an enormous gap between the current price and the fair market value, in many, many cases 50% or more, that at some point I would suspect that if this bear market persists, as I expect, that gap is going to close. There's a lot of companies in the Standard & Poor's 500 that looks like this. Make sure that you don't own one of them. The downside is horrific. Now, let's carry on with the FANGs and take a look at Tesla. Tesla has been trading right now between the HB4 and the HB5. That's 20 times book and 26 times book. So far, it's holding in here. The only thing that I kind of wonder about is this period here, which I call sloppy trading. That is, it's sort of traded either side of the HB4. Sloppy trading tends to be a signal of market uncertainty. Now, it worked out for Tesla this time around, but we have to keep that very much in the back of our minds. When I take a long look at Tesla, unfortunately, history gives me very, very little to work with. There was that long period when Tesla was setting up, had that huge run, but then a long period, 5 years of essentially trading sideways. Then as the earnings started to come in, the stock had a big run. The question is, what happens now? Is that those earnings going to accelerate? What's going to happen? We're going to have to trust SVA to tell us. As long as the HB4 holds, okay, we're good. NVIDIA, actually, NVIDIA is almost a tale of two jaws of death, isn't it? The first one closed way back in 2018, and the second one looks to be closing right now as we speak. And the downside target, I have said for some time, is the bubble price. The HB2, which is 12 times book, has been broken now on the downside. At least the HB1, which is $99, is now, I think, coming up. But if history is any guide, and I suspect it is, look for the bubble price ahead. The big question, of course, is from a long-term perspective, is that it? But that's going to be a story for another day. Meta, the problem with Meta, I've shown the long-term history, is that it's not really long-term enough to get a real good fix on what the stock might do. Now, when the Meta was first, or as Facebook first went public, it was a real schmozzle. My goodness, that was the underwriters did a frightful job, and the stock really plunged. However, it only plunged down to its mid-growth price, and that's where the stock is today. So I shall be watching that one closely. Now, this is one of the rare FANGs that actually has any fair market value. In fact, the FMV potential is now about 40% above the current price. So I'll be watching to see if the mid-growth price holds. I had been expecting the super growth price to fail, and it has, but now the next question is, now what? Apple, well, Apple has now fallen perhaps to its HB5. As I said, we need another balance sheet to get a real fix on that stock. If I take a longer look at the stock, I can see that for a long period of time, the fair market value, that's the dotted line on the chart, held that stock beautifully. But when it entered into that period of share buybacks, therefore the ROE accelerated away, and with it so did the valuation. The question now, as I asked actually earlier with McDonald's, are those buyback stocks now going to start closing in on their own fair market value? If so, Apple would have virtually bang on 40% to go. Finally, Netflix. I really have to like this stock. Here's the long-term view of the company, which I think you'll be fascinated to see. Going back in time, Netflix has always tended to bottom at its super growth price. That's 3.5 times book value, and it did it again perfectly. You know, this stock sort of gives every intention or every appearance of intention of wanting to hold here, and I'm kind of rooting for it right now. Anyway, in summary, a picture is often worth 1,000 words. And I trust that the pictures that I showed you today will help you going forward. Some, one or two, of the FANGs may be conveying a powerful message to you right now. So I would urge you to keep these pictures in mind. But first of all, the three market indices, the NASDAQ 100, the S&P 500, and the Standard & Poor's TSX, are struggling to hold at their June market setback lows, and they look as if they are cracking. They have already crashed through their key SVA breakpoints some time ago. Okay, remember that when they fell through the bubble price for the NASDAQ and the super growth price for the S&P. Stock market history, I have to say, is not in your corner if you happen to be bullish. So please keep that in mind. The key market indices have always bottomed at breakpoints, never in between, that I have ever experienced. However, if you'd like to be bullish, Netflix is hanging in nicely at its super growth price and higher. That's a very long-term low, and the stock looks eager to hang in. I'd continue to stay with it. And if you'd like to dream, Amazon, after falling through its HB1 price, as I said would be the case, could hold yet again at its bubble price, that 7.4 times book. It's a very, very long-term low. I hope you wrote that number down. Tesla's in a trading range, but not a particularly important one from its own history. However, as long as the HB4 price holds in, that's 20 times book, you can stay with the stock. I hope you heard that phrase, as long as. For other FANGs, enter now the jaws of death. Microsoft has some way to go before reaching its own bubble price, that's 7.4 times book, and that looks as if it's exactly where it's going. You ought to see for yourself the other NASDAQ 100, or at least the NASDAQ 100 index, in order to find who else is there besides the two that I did show you. NVIDIA will get to its own bubble price with ease. Is that it? I'll leave that answer for another day. I kept warning you that Alphabet and Meta would track lower, and both stocks clearly point down. The history of Alphabet is particularly intriguing. I hope you agree, and I expect that its supergrowth price lies not too far ahead. Meta is in a no man's land, as it has no long-term parameters to go by. I suspect that the bid growth price, that's 2.5 times book, is unlikely to hold, and a decline to the growth price would therefore be in the cards. And that leaves Apple, which I have remained negative towards, although the SVA negative evidence is less compelling for an outright sale of the shares. So, lots to think about this week. As we have seen over the past 3.5 years of our FANG Friday telecasts, these behemoths have provided many opportunities to trade, both on the long and the short side, and nothing has changed this week. There's always more to do. For now, this has been Ross Healy, the Chairman of Strategic Analysis Corporation and a Senior Portfolio Manager at McNichol & Associates, reminding you that nothing, including investing, is difficult if you have the right tools. I'll see you